Podcast Network Asia. FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy, in the hope of providing you investing and trading guidance. Here's your host.
Happy holidays, investors! This is Anjz from First Metro Securities, and you're listening to Market Bites. If you're looking for fresh trade ideas or want to know which stocks deserve your attention, you're in the right spot. Today, we're breaking down the latest highlights from a recent report on SM Prime Holdings, or SMPH. We are keeping our buy call on SMPH, though we've trimmed our target price to 28 pesos, as we roll valuations forward to next year. This new target reflects a price-to-earnings multiple of about 15 times FY26 earnings, which is still attractive compared to historical levels. Looking ahead to 2026, SM Prime remains one of our top picks. The company's strength lies in its world-class small portfolio, which generates the bulk of its earnings, around 75 to 80% from steady recurring income. With strong foot traffic and resilient occupancy, SMPH is well positioned to ride the recovery in consumer sentiment and spending. On top of that, SMPH is part of major benchmarks like the MSCI Emerging Markets Index and the PSEI. This boosts liquidity and makes it more attractive to foreign investors. Put simply, SMPH is set up to be a prime beneficiary of renewed confidence and potential fund inflows. Now, let's take a look at SM Prime's performance for the first 9 months of 2025. Net income came in at 37.2 billion pesos, up 10% year-on-year, in line with consensus in our estimates, on revenues of 103.4 billion pesos, which grew 4% year-on-year. Leasing remains a growth engine, up 7% year-on-year, contributing 59% of revenues, while real estate sales dipped slightly by 2% year-on-year. By segment, on the residential side, revenues fell 2% year-on-year and reservation sales dropped 23% during the period. But here's the bright spot. 3Q25 reservation sales rebounded 79% year-on-year, driven by demand for ready-for-occupancy units and targeted marketing. Inventory stands at 26,000 units, with management aiming to cut turnover to 15 months by 2026. Malls continue to be SMPH's core driver, with revenues up 7% year-on-year and EBIT rising 16% year-on-year, thanks to strong rentals and disciplined expense management. Occupancy is solid at 95%, and expansion plans remain intact, with new malls and redevelopments lined up for 2026. Offices and warehouses delivered stable results, while hotels and convention centers posted the strongest growth, up 9% year-on-year, on higher occupancy and surging event bookings. Expansion is underway, including a bigger SMX at Mall of Asia and a new flagship SMX in Cebu by 2026. Overall, SMPH's recurring income from malls, offices, and hotels continues to anchor growth, while residential recovery shows early signs of momentum. We do like to see more from SM Prime for us to get more bullish. Things like a faster inventory absorption, better than expected execution of premium residential offerings, office demand recovery, and/or faster progress in passive reclamation project, since these could unlock substantial upside for SMPH. Still, we also need to keep an eye on the risks. First, the residential segment could weaken further, which may put pressure on property prices. Second, if consumer spending slows more than expected, that could hit mall performance. And third, with more companies adopting hybrid work setups and AI, we could see office vacancies stay elevated, leading to rental pressures. To wrap things up, we are maintaining a buy call on SMPH with a target price of 28 pesos. Yeah, and that's it for this episode. Thank you for tuning in to Market Bites. If you enjoyed this, don't forget to follow First Metro Securities on Facebook, Instagram, and YouTube, and catch us on TikTok at FirstMetroSec for more market insights. That's all for today. Stay sharp, investors, and we'll see you in the next episode.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.